What must I say? I must admit, transformational thoughts that we managed to gather right in our first panel discussion. And with that, what we're going to do is take that trend forward and gather more and more insights in the form of our next speaker as well. As we move ahead, we are focusing around how financial sector can play a very important role. And this is where we call about the green transformation in Asia. And we will be gathering thoughts from Rajeev Kannan, Managing Executive Officer, Deputy Head, Asia Pacific, Sumitomo Mitsui Banking Corporation. And ladies and gentlemen, Mr. Kannan, in fact, comes with an extensive experience of more than 27 years across investment banking, emerging market investing, and energy and infrastructure sector as well. So on that note, let's deep dive into our next session. Let's gather more insights from none other than Mr. Rajeev Kannan.
Thank you, Economic Times, for inviting me to speak at this event. It's a great honor for me to be part of these proceedings. Today, I will seek to talk about the role of financial institutions in green transformation in Asia. Financial sector always has an important role to play in any form of transformation, be it GDP development or economic development or even inclusion. And in terms of the green transformation, which is a key topic for not just Asia, but globally, I believe financial sector has a very important role to play. So let me move on to the first slide, which is essentially giving a perspective of how this all started. When we think about green transformation, I think the most important point is impact. How can banks or financial institutions make an impact? Which is, when we think about impact, there are two parts of the impact. One is a positive impact, and the second is to reduce negative impact. When we talk about reducing negative impact, it's essentially trying to reduce the amount of funds we provide to sectors which are carbon heavy, sectors which create pollution, sectors which are not sustainable. And when we think about positive impact, it is actually to create sources of energy, for example, which actually are carbon neutral or carbon positive. Secondly, basically creating inclusion of society so that they can actually progress as we create positive impact. So financial sector actually has to play a role both in terms of providing green and sustainable finance, but also responsible finance. And working as a partner with various sectors, I think we can deliver a very long-term impact to the markets. Now, when we think about green transformation in Asia, this is led by various stakeholders, as in no single stakeholder can drive this big engine. Now, when we think about the stakeholders, they are typically governments, corporates, financial institutions, the society, the other stakeholders like non-governmental organizations. Now, some of these deliberations which various people are having, various stakeholders are having include, for example, national governments setting net zero goals over a certain period of time. Now, regulators will have to then set up risk management policies and also policies which address climate change risk. And this can include both physical and transition risk. Corporates also are setting their own goals. I think a number of corporates have already signed on to very key objectives of meeting net zero by a certain number of years or certain period. And they have basically a number of international as well as Indian companies have taken a very important step in terms of announcing their sustainable policies. The share of renewable energy obviously is a key part of this entire spectrum of being more green and more sustainable. But the key issue is how long will it take for renewable energy to play a very important part of the overall energy mix. Now, how can financial sector help in all these? I think financial sector can actually help by setting targets for green and sustainability loans, identifying the negative sectors, and also reducing their own carbon footprint. So when we think about financial sectors, we're not just talking about our scope 1 and scope 2 emissions, but we need to have a clear strategy towards reducing our scope 3 emissions. So let me move on to the next page. How do financial sectors think about their role in both balancing economic development, but with sustainability? Because it is quite critical to recognize that particularly in most parts of Asia, they are still developing economies. They haven't had the opportunity to develop as a lot of the Western world has done or that OECD countries have done. So the question about sustainability has to always link up to the ability for the society to pay for the cost of power, for example, or water, or any other daily livelihood matters which to them. Now, let me talk about some of the questions we are asking and a lot of the financial sectors are asking. Do we continue to support fossil fuel as they remain an important part of the future energy mix? What happens if we turn off the tap fully for the fossil fuel sector? And I believe a lot of the banks, including SMBC, have already made a very key announcement that we are seeking to reduce or bring down to zero our exposure to fossil fuels. Now, what about other sectors, not just fossil fuels? For example, palm oil. Palm oil, unfortunately, has had a negative reputation over a period of time. But at the same time, it is a very critical edible oil for most developing countries. So how do you sort of balance the requirement, which is a basic livelihood, versus the reputation issue when we sort of support palm oil sector? Now, when we talk about mining development, obviously mining doesn't need only mining for thermal coal, but it could be mining for other commodities. For example, nickel, which is a very key product in EV cars or EV vehicles. How do any development of mine have an impact on the local communities? Would it lead to some relocations? And if that is the case, how do you make sure that their livelihoods are still taken care of? And what's the fair level of compensation? And it's, as I said, mining can be many different sectors. It's not just thermal mining. So for example, copper and nickel are critical components of our future economy, of a green economy, of a sustainable economy. So what do we think about supporting the mining sector? Now let's talk about any form of transportation, be it shipping, aviation, or even road transportation. Again, shipping is definitely one of the large emitter of GHG gases. Shipping industry is taking some very important steps, including reducing their use of HSFO or heavy sulfur fuel oil, or also talking about reducing their carbon footprint by using natural gas as a fuel, but also thinking about electrification. But these are long-term trends. So how do we think about today continuing to support this industry, which is critical for global trade? Now, when we think about these risks, again, we picked up two data points. One is 2008 and the second is 2021. And we looked at risks from 5 broad categories: economic, environmental, geopolitical, society, and technology. When we looked at risk in 2008, what were the top global risks in terms of likelihood? We were talking about asset price collapse. We were talking about the instability in Middle East. We were talking about failed states or failing states. Oil and gas price hike or spike was one of the key concerns. And chronic disease was a concern in a number of the parts of the world, but we never talked about COVID, for example. And in those periods, we were talking about, in terms of impact, asset price collapse, retrenchment because of the globalization, and where basically jobs are lost in certain countries and moved to other countries. Slowing Chinese economy at that point of time was a big concern. Oil and gas price hike would have had a significant impact on countries like India. And pandemics was also perceived to be one of the concerns. But move forward to 2021. If you look at the top 5 risks, global risks in terms of likelihood, they're all climate related or related to any form of infectious disease. So we're talking about extreme weather events. We're talking about climate action failure. We're talking about impact on humans because of environmental damage. We're talking about the infectious disease and biodiversity loss. So I think what the key point to highlight here is, today and going forward, the risks are a lot aligned to the environment and the impact part of it, rather than a lot of the other risks when we thought about 2008. So let me move on to the next page. So financial sector has created a number of very useful tools to support sustainable transactions. We have looked at green finance, we have looked at social finance or sustainability linked finance. Now, let me talk a bit more about some of these products. Now, green finance or social finance typically are loans or any form of capital market instruments which have a very defined use for either green projects or social initiatives. And they have certain principles they have to adapt to, which is either green loan principles or social loan principles. And the core components is, what is the use of the proceeds? How are the projects evaluated and selected? And eventually, how is monitoring and reporting done for these kind of transactions? The benefit of this is we use these products to actually help create more flow of funds into the ESG initiatives. And increasingly, there is a huge demand from investors for ESG loans. And I think these products, again, if I talk about green finance and social finance, as well as sustainability finance, maybe 3 years back or 4 years back, they were, I think, 2 to 3% of the global loan capital markets. Now we're talking about close to 10% of the global loan capital markets. In addition to green and social finance, sustainability linked finance is basically where we look to provide funding to the corporates, where their financial cost is linked to certain very clear sustainability targets. And these sustainability targets are actually predefined and based on independent assessment. And these KPIs are set with not just baseline KPIs, but fairly ambitious KPIs. And if these corporates meet those ambitious KPIs, then actually it helps both improve their own profile, but actually creates financial incentives to actually meet those targets. And we have seen that these kind of products have been very well accepted by the corporate market, but also from the various stakeholders, including the government, the regulators, as well as the society at large. So let me move on to the next page. As I mentioned before, the ESG loan volumes in Asia has exploded over the last few years. In the context of volumes, I think, for example, in 2021, green and ESG loans constituted almost $90 billion. And this is basically still a small part of the global pool. For example, globally, I think there was about $512 billion of green and ESG loans which were done during the course of 2021. But if I look on a year-on-year basis, as I said, it's been growing quite exponentially. So it is almost 150% of the previous year. 2021 marked a very key trend in this regard, because it was also during a COVID period where increasingly people felt they have to accelerate their focus on sustainability. And we could see the volumes growing much more significantly. So if you look at the chart on the left-hand side, you can see that in the last 5 years, the volumes have gone up 5x. But I think this is just a tip of the iceberg. So increasingly, I do see that almost maybe 20 to 30% of every loan which is issued in the market will have some level of linkage to sustainability, ESG, or green. Now, where are the, keeping to the previous page. Now, where are the key markets and where are it's being used, and what sectors are being used? So, for example, some of the big markets for sustainability linked loans include Australia, Singapore, Japan, but India also has a fairly important role to play in this. Coincidentally, I spent almost past few days in India traveling through various parts of India, including Hyderabad, Mumbai, and Delhi now. And every conversation I've had with corporates here, it's very clear to me that they're very well focused on ESG, and they're always looking for ideas and solutions of what other corporates are doing in other markets, both emerging markets, also developed markets, in terms of how they're actually managing their carbon footprint. Now, if I look at the sectors, again, real estate somehow was one of the largest sectors, because again, green buildings or green marks on buildings was an early start, and a lot of transactions have been in that sector. But number of other sectors, including utilities, financial services, as well as even general manufacturing, have been focused on creating demand for sustainability linked loans. So let me move on to the next page now. Again, where does SMBC stand, and what is our commitment to this sector, and how do we actually see playing a role, not just in the past, but going forward? Again, SMBC has been in the space for a number of years, and we are a top-ranked player supporting both on green loans as well as ESG loans for a number of years. So if you can look at the league tables, we are typically in the top 3 across global markets, Asia Pacific, as well as specifically relating to both in 2020 as well as in 2021. So we remain committed to play a very important role and being a large provider of capital for corporates as well as transactions in this space. And we have announced, as we can see on the next page, a series of very important commitments, because we believe that we can't just support our clients, but we have to walk the talk. We have to lead by example. So just to share a bit, as an SMBC announced what we call SMBC Group Green Globe 2030, where we announced a commitment, our group statement on sustainability. Some of the key initiatives which we announced as a part of this Green Globes 2030 was creating a corporate sustainability committee, which is actually chaired by our group CEO. Then we had a clear focus on updated our mission to include society, not just our customers, our shareholders, and employees, because we believe contributing to our society is critical. And then more specifically, when we talked about our long-term KPIs under the Green Globe 2030, we committed to provide or raise capital of almost 10 trillion Japanese yen during the course of the next, within this decade, so that's by 2030. And we actually also announced reduction of carbon by 2030 by 30%. But actually, these commitments which we had announced about 2 years back, we have already updated significantly. And we have now announced that we will actually raise or support funding of almost 30 trillion Japanese yen, out of which green finance will be 20 trillion Japanese yen. And we have actually announced on a scope 1 and scope 2 basis that we will be net zero by 2030. And we have also signed up to the Net Banking Zero Alliance, which is one of the global alliance of various key banks all over the world. In addition to the green parts of it and carbon footprint, we've also committed to look at our social contributions and financial inclusion. So, for example, we've announced that we will actually help educate, particularly financial education, of almost 1.5 million people by 2030. And we are well on track to achieve that. SDGs, I think, are key items which all employees of SMBC are very well aware of. And we have actually been embracing various SDGs across the different groups of SMBC, and we look to continue to focus on this. And this slide summarizes some of our already awards which we've got. But again, we are not going to rest on our laurels. Our focus is on continuing to deliver our commitment to this space and supporting our clients. Again, this is a quick snapshot of both our perspective on green transformation in Asia and how financial sectors can play a role, and how SMBC has been trying to play a role in this regard. So I thank you for taking your time to listen to my talk, and I'm happy to have an opportunity to share anything more if you want to reach out to me. Thank you.
Thank you very much indeed, Rajeev, for sharing your valuable thoughts. And I'm going to take that one key word that you had shared, which is impact. Also, at the same time, sharing across some very interesting initiatives that have been contributing towards the sector. So thank you so much for sharing that, ladies and gentlemen. And on that impactful note, let's actually move forward very quickly towards our next session as well. As you can see, we have a very interesting agenda in store. So we will be going back to back from one session to another. And this is where we will be focusing on another keyword, which has got to do with collaboration. And the big question is how collaboration will shape Asia's advancement in digital transformation and innovation. This evening, we will be gathering insights from Jack Madrid, President and CEO, IBPAP Philippines. And as the head, he's at the helm of ensuring that the Philippines remains competitive and relevant as a prime investment destination for IT BPM services. He's a seasoned business leader with more than 20 years of experience in strategy, digital, innovation, and transformation initiatives. So on that note, ladies and gentlemen, once again, let's deep dive into gathering thoughts from our next speaker, Jack Madrid.